Good day. Welcome to Thuma Mina Teaching. Today we are going to do EMS Term 2 Financial Literacy about income and expenses. Let's look at income and expenses, and we are going to explain to you why it is important that you know what is an income and an expense. Let's start with personal income and expenses. Personal income is money that a person earns and uses in his or her daily life. What is personal expenses? Personal expenses is all the costs you incur in your daily life or what it costs you to live your life. If we look at this example, typically the main income is your salary and maybe rent income, and the main expenses are your mortgage or rent of your house, electricity, water, cell phone and television. Remember, everybody's income and expenses will be different, but it is important that your income must be higher than your expenses to be able to earn a profit or to save some money. Let's have a closer look at personal income. Remember, personal income is money coming in, ways that we can earn money. For example, wages or salaries, that is where you work for your money. Wages are paid weekly and salaries are paid monthly. Interest received is interest that you receive from your investments. Then you can also earn money through rent income. That is, if you rent out a building or a house. And the last example is social grants or government grants. Let's move over to personal expenses. Remember, personal expenses is money going out. Here are examples of personal expenses. Accommodation, utilities if you travel, clothing, food, medical expenses, your premium for life insurance, motor car, home, entertainment, and interest on debt. Remember, these examples are personal expenses. It has nothing to do with the business. Let's move over to the personal statement of net worth. Have you ever researched celebrities' net worth? What is a net worth? It is your financial value at any given point. A statement of net worth is your total assets minus your total liabilities. We are going to look a little bit more deeper into your personal assets and your personal liabilities. Some personal assets are cash, investments, and some personal liabilities are loans, credit cards, and your personal debts. So, the total assets minus the total liabilities is your net worth. So your statement of net worth is a balance sheet, and that is your financial value at a specific time. Remember, your net worth is your total assets minus your total liabilities. Therefore, expenses decrease your net worth and income increases your net worth. You will make a surplus if your assets are bigger or higher or more than your liabilities, and you will make a deficit or a shortage when your liabilities are more than your assets. Here are steps to compile a personal statement of net worth. Step 1. Get your records together. Step 2. Make a list and add the total value of all your assets. Step 3. Make a list and add the total value of all your liabilities. Step 4. deduct your liabilities from your assets to determine your net worth. And the last step, step 5, determine if your net worth is a surplus or a shortage. Let's look at Cyril's personal statement of net worth. Let's look at the value of his assets. His cell phone, the money in his bank account, and the car he is driving. Then you add the value of the total assets. Then you look, that is step 3. You look at the liabilities. You take the loan, his credit card, and his clothing account. Then you add the value of his total liabilities or debt. And then the 4th step is you subtract the liabilities from the assets and you calculate your net worth. And then your last step, you must determine, is it a surplus or a shortage? So in Cyril's case, is he making a shortage or a surplus? Yes, he is making a surplus. Let's go through an activity together. Remember, assets is what you have and liabilities is what you owe. Instruction: you are requested to draw up a personal statement of net worth for the month May 2021. The instruction is you must draw up a personal statement of net worth for the month of May 2022. Make sure you evaluate the information very carefully. We are going to divide this information between assets and liabilities. Okay, let's go. Remember, this is an interactive activity, so work with me. Let's start with the cell phone. Is it an asset or a liability? It is an asset. The next one, loan from the bank. Asset or liability? It is a liability. Third one, money in the bank. Asset, liability? It is an asset. Credit card. Asset, liability? It is a liability. Your car. Asset or liability? It is an asset. Account at clothing shop? A liability. And the last one, furniture. Asset. Let's look at the answers of this activity. Your assets equals to 89,400 and your debt or liabilities are 22,150. All your assets combined is 89,400 and your liabilities combined is 22,150. To calculate your net worth, you take your assets minus your liabilities and the answer is 67,250. So, once again, is it a surplus or a deficit or shortage? Yes, you are correct. It is a surplus because your assets are more than your liabilities. Thank you for joining us. In the next lesson, we are going to continue with business income and expenses.